red. I hope that doesn't indicate the markets also, but the Sensex has hit a 62,000 limit. The Nifty is above the 18,400 points. IT, PSU banks are gaining and metals are dragging. What are you picking up?
Absolutely, Adhiraj. Yes, we did start a bit in the red coming in, but yes, markets seem to have recovered slightly, but still, amid this volatile session that we're seeing coming in, a muted day is what we could call, at least for the markets. Like you mentioned, 18,400 above that mark. Nifty is holding on to those levels. Sensex above the 62,000 levels as well. Mid-cap, small-cap space, that's the broader markets. A slight bit under pressure, and mid-cap is down 0.1% in trade, while the small-cap space also is trading almost flattish with a negative bias as of now. Sector-wise, PSU banks is seeing good gains coming in. The rally in PSU banks seems to have continued. But other than that, metal, realty, FMCG, all these sectors are trading in the red. So not much of an exciting day coming in on the markets. But, one stock that we will be talking about is Manappuram Finance. We are joined by today the VP, Mr. VP Nandakumar, the Managing Director at Manappuram Finance this morning. Very good morning, sir. And, I do want to start by, just talking about your loan growth coming in Q2. When you look at your loan growth, that has been muted by the NII growth that has been quite strong. Now, what is driving this NII growth that we could say? And is there a switch actually towards the higher yielding assets now?
Yeah, during the pandemic days and thereafter, sometimes we were focusing more on larger ticket size loans, where the yield was below 10%. We were part of the past, conventionally we were focusing more on high yielding products to small ticket high yielding products. So there was some switch over to large ticket size where the interest rate was below 10%. We have now we are focusing more on that higher ticket, that high yielding products, lower ticket products, so the customers started coming back. So when we are shedding that low cost portfolio, there is some the growth is muted because of that. So it will we have now this low yielding product has gone up to 35%. Some stage it has come to around 25% now. We are comfortable at a level of this low yielding product maintaining at around 10%. So 15% more to go down. This is helping us in improving our yield to around 21%. And we hope to maintain somewhere around 20-21% to recover.
Very good morning, sir. This is Adhiraj here joining in. I would also like to ask you, sir, how are you looking at gold loans, growth, pricing and competition?
So, in the lower end of the pyramid, the customers from the lower end of the pyramid, their requirement for loan was less, gold loan in particular was less. But as the activities have picked up post-pandemic, the things are improving, and I hope that the coming quarters it will improve and we'll be able to catch up the growth momentum.
Right. And, just in terms of, so now with the growth in the MFI housing and vehicles, what is the kind of overall loan growth you are targeting, and what will your loan mix look like over the period of time now?
So, our company was a gold loan company in the past, and during the past 5 years, we have taken a conscious decision to become a well-diversified loan company. So we have decided at some point to grow our portfolio, non-gold portfolio to around 50% over a period of 3 years. So then pandemic started, etc. It got delayed. So it was our decision to become a diversified company. So we acquired Asirvad Microfinance, which had a success during pandemic, but it is coming out last quarter also. The results are very evident. We have come out of that, and coming quarters are good. And not only that, because under the new regulatory regime, there is some element of freedom in fixing the pricing for the product, which will definitely improve our margins there. And the quality of asset is consistently improved. The collections have gone to around 103% of the billing, etc. But the other businesses like vehicle finance and the home finance also, we are able to bring down our non-performing asset to a desirable level. It is going on. So these businesses are showing traction as far as growth is concerned. So we currently the non-gold loan business has reached a level of 39%, and our target is that the business also come up to the level of 50% over a period of time. So the question about the growth target, our desired growth target, planned growth target is at a CAGR of 20% annually. So we are targeting 20% ROE also. So that target couldn't be achieved because of the pandemic. Now, as is evident from the last couple of results, we have come to that path of achieving that. And the coming quarters, there is the confidence that we'll be able to achieve growth. And on the consolidated portfolio, we'll be able to demonstrate the growth of 20% in the coming quarters. And also the ROE is also going up.
Right. Many thanks, sir, and thank you so much for speaking to us on ET Now. It's been our pleasure. That was VP Nandakumar, the Managing Director of Manappuram Finance, who spoke about the quarter gone by. But moving on, now railways has been the one sector that's been on everyone's focus and has been picking up a lot of speed. My colleague Sharad comes in here now to tell us why they are buzzing and what the key triggers are. Good morning, Sharad. Take it away.
Well, yes, two important things. First is the modernization, and the secondly is the capex push, which is actually making the railways as well as the railway stocks which are listed buzzing in trade. Now, do remember that there is an elaborate plan for the modernization for future ready railway systems coming in at 2030, and also a large investment of almost 39 lakh crore rupees has been allocated in the National Railway Plan for the next 30 years as well. Now, if there is an increase in the railway share when it comes to the investments, India's logistical costs will also come down. It's currently at 13 to 14% of GDP, expected to come down at 11%. And of course, a very big announcement coming in that railways is adding 90,000 wagons by 2025. And the focus would also be there on the domestic manufacturing under the Atmanirbhar scheme. Now, the important triggers also include tenders coming in for the Indian Railways. And for the wagons, operating income is expected to go at 25% CAGR over the next 2 years. Now, apart from this, the railway capex plans is something which I'd like to point out, that there will be a doubling of the new tracks coming in, which is currently at 4 to 5 kilometers of construction, and the target is set as 12 kilometers per day. And apart from this, high-speed trains is also in focus, and they'll be also constructing a 500 multimodal cargo terminals. And do remember, there are certain stocks which would be there in your radar. It should be RITES, Texmaco Rail for wagons. We have RailTel, Rail Vikas Nigam, RITES, as well as Titagarh and other numbers.
Sharad, thank you so much for that update coming in on railway stocks. They are gathering speed, but let's bring on board our experts for today. We have Kunal Bothra as well as Avinash Gorakshekar joining in with us this morning. Good morning actually to both of you all. And Avinash, I'm going to come to you. Sharad did mention some key triggers coming in, whether you look at the capex plans or whether you talk about... okay, Kunal, I'll come to you then first actually. Kunal, like I was saying, Sharad was mentioning about the triggers coming in, on the fundamental side, whether you see capex plan, other operating income coming in as well, that is expected to improve coming in for manufacturers and wagons. But what are the charts looking like? And in the railway space, like you were saying right now also that, we've already seen a run-up coming in since the last 5 months. So how much more run-up is actually left for the stocks and how much more steam is there for this one now?
Good morning, Vinny. Good morning, everyone. So my belief is that most of these railway stocks, and specifically the ones which have rallied up higher, so there are two charts which I've highlighted, RVNL, Rail Vikas Nigam, as well as IRCON. Now, for RVNL, as you can see on the charts, the indicators have overshoot, has managed to come back into an overbought territory for itself. And whenever we've seen historically that's kind of a pattern which has emerged, the stocks have actually gone into a multi-month consolidation. So the more the stocks rise at an overbought territory, the cautious you have to become in terms of initiating a fresh buy, even though the momentum is very high, because whenever these stocks consolidate, that correction / consolidation would last and impact the stock for a much higher degree. Same is the case with the second chart, which is IRCON as well. The stock has done exceptionally well, but then the indicators are just about entering into the overbought territory. So risk reward wise, not a great level to initiate a fresh buy. If someone has to look out for buying from the railway pack, I would look at IRCTC as a much more preferred and a stable bet from the pack.
More preferred and a stable bet would be IRCTC. Maybe slight bit of an overbought situation coming in for IRCON and RVNL. But on that note, we'll slip into a very short break, viewers. Don't go anywhere. We'll be back with your stock-related queries after this very short break.
Hello and welcome. You're watching Market.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. We will be taking your stock-related queries, but before that, good morning, Avinash, and I'm going to come to you. How should an investor be protecting themselves? Volatility in the market continues, muted market move that we're seeing coming in today as well. What should one be doing to protect themselves as well as actually, make some returns? How do both these things go hand in hand?
Good morning. largely focus on the large caps and some quality mid cap companies where the earnings growth trajectory is pretty solid, where the growth outlook is positive. And I think if you could look at sectors like automotive, auto components, capital goods, I think there are lots of opportunities in the mid cap kind of basket where earnings growth is pretty strong. So I think investors should largely adopt a SIP approach and take a slightly medium to long term perspective if they want to build a portfolio. I think the volatility can to a large extent be addressed only if the time or very short-term time frames, and I think try to build a portfolio gradually through an SIP approach. So this could be a very good way of building a good portfolio even in a volatile market like this one.
Right, thank you so much Avinash for that. But viewers, you know what time it is. Buy Now Sell Now is your one-stop destination for all stock-related queries. We're going live now on all our platforms, Twitter, Facebook and WhatsApp. There's a number flashing on top of your screen. Do write to us so that you can get your queries answered. We begin now. My first question, I would come to Kunal. Kunal, SK Karan is writing to us from Bangalore. 100,000 shares of Coal India bought at ₹300. Can he buy more or average? And at what price?
So already bought at 300, you said, right?
Yes.
Okay, so I would suggest that you can look to average. I'm not sure that whether it's a dividend adjusted price which you're saying, because I think if I'm correct, my understanding is right, then I think from the time the stock was 300, which is many years back, the stock has gone through a lot of dividends as well. So I'm not sure what's a dividend adjusted price for Coal India, but I would still suggest that you should hold on to the stock. And in case if you're looking to go for an entry point, then I believe closer to 220 mark could be a classical entry point back again for Coal India.
Okay, Kunal, just going to come back to you. The next query we have is coming in on Tata Chemicals. Now, Ram Shankar wants to know whether it's a good time to actually start buying Tata Chemicals, or would we be seeing any further correction?
So, I am frankly a bit disappointed with the recent price trends for Tata Chemicals, because this was at a point where the stock was perched very closer to that 1050-70 breakout, and there could probably have been a good potential breakout above the 1200 mark as well for Tata Chemicals. But the stock failed to give any kind of a momentum boost, and we've seen the stock correcting from 1200 to now 1050 odd levels for itself, which means that the near-term trends for Tata Chemicals have reversed. That's generally a time when you don't build up positions, but you wait on the stock price. So I would suggest to wait out for possibly another 2 to 3 weeks, let the stock complete its phase of correction, consolidation, and let the momentum of the buyers come back into the stock. Now, whenever that happens, that would probably establish a strong support for Tata Chemicals. So as of now, I would say, avoid the stock at current levels.
Okay. Avoid the stock at current levels, at least. That's Tata Chemicals. But Avinash, coming to you, and Soumitra Joshi wants to know on Hindustan Foods. Now, he's bought this at somewhere around 100 rupees. Right now, the stock is somewhere around 600 rupees. So, should they exit or continue to hold this? What's your view on Hindustan Foods?
No, I think he should continue to hold on. I believe Hindustan Foods is a very strong outsourcing story. And prospects, at least in the near term, look to be quite strong. So I think continue to hold on. I would believe that even from these levels, 10 to 15% upside is possible. So,
Kunal, this one's for you. Kalyan's writing to us. He wants a fundamental view on metal and hotel stocks. He's currently holding PCBL, SAIL, Lemon Tree, and he wants to know if he can hold book profits.
So I'm not sure what's your actual buy price, but if you're in the money or in profits into most of these names, and I'm assuming by a good margin, then I think it makes a lot of sense to book out profits for many of these hotel stocks. Metals, on the other hand, I would still continue to have a bullish view, but then you have to be very specific in terms of the stocks which you're looking to buy. For example, I would believe that the likes of JSPL, Hindalco, they can be stronger bets from current levels. SAIL, I think somehow has reached that initial target zone which I had highlighted closer to 88 mark. Now, once the stock crosses about that 88 levels is where you can look at even SAIL as a potential big breakout buy for the stock price. So I would suggest that you concentrate very specific on the metal names, but for the hotel stocks, I think it makes a good sense to book out majority of your profits.
Okay. Kunal, we'll just patch the line again with Avinash. It's a patchy line, but Kunal, I'm going to come to you. KR Balan has a query coming in, and this one is on Happiest Minds. They bought Happiest Minds at 450 levels, as well as they have Sona BLV also at 410. Now, they want to know whether they should be holding the stock or shifting maybe to something like a Kotak and a TCS, and they have a time period holding of only almost 12 months.
So I think if that's the kind of a time frame, then you should definitely make that switch, from these names, Happiest Minds as well as Sona BLW towards the likes of Kotak Bank. You can probably include maybe a likes of, the like of HDFC Bank as well. I think it always makes a lot of sense to stick towards, large cap names when the markets are going into a first level of a breakout. And I think in that regards, sticking towards quality, and from that quality as well, you're looking towards more of the performing sectors. So banking, both the private sectors as well as the PSU banks, they've been one of the best performers. So, the market always gives more premium to these performers. And that's why I believe it makes a lot of sense to make that switch from the existing stocks like Sona BLW as well as Happiest Minds to these names.
Right. Subrata Mukherjee, our long-term viewers asking us, Kunal wants to buy Tech Mahindra and sell Glaxo Pharma. Please advise.
I think it's a good switch, selling Glaxo, because most of the pharma stocks have underperformed. Glaxo as well, I think, is trading at a multi-month, multi-quarter low around the 1300 mark. And Tech Mahindra, on the other hand, I would suggest, that you can look to add at current levels, because my belief is that most of these IT names are in process of making a strong comeback. But I would still believe that Tech Mahindra may not be the best pick from the IT pack. I think HCL Tech and Infosys would still stand to be my best performers, or my best recommendations. I've been highlighting this stock, these group of stocks over the last 3 to 4 weeks. I would still maintain the stance on HCL Tech and Infosys. So you can look at Tech Mahindra, but a far more better pick could be HCL Tech or Infosys.
Okay, that's the view coming in. But with that, we'll slip into a very short break. Viewers, don't go anywhere. We'll be back with the stock-related queries after this break.
General health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going then with your stock-related queries. And Avinash, coming to you, we have this query coming in from Shaji, and this one is on BASF. They're currently holding 50 shares of BASF at around 2,825 rupees. Now, their hold period timing is 1 to 2 years. Should they continue to hold this, or should they be looking to switch and sell this one?
So I think in the near term, the company should be facing multiple headwinds because they have supply, logistic, and raw material sourcing issues. So I would believe that over the next, say, 3 to 6 months, we could see a little weaker performance from BASF. But longer term, this is a German MNC which has got a very strong parentage. So only if the investor has got a 12 to 18 month time frame, he should hold on. But in the short term, I don't expect any major upside on the stock.
Right. Kunal, coming to you, Bijan Chakraborty is writing to us, holding Muthoot Finance at 1,317, 50 shares. Long-term investor, please guide him where he can hold it for 4 years more.
Well, I think you should definitely look to hold on. I think the worst seems to be over for these gold finance stocks. I was looking at the charts for Manappuram as well. That stock has made a very good comeback. Muthoot Finance apparently is more stronger and a stable one, less volatile as compared to Manappuram Finance. So whenever there is a major recovery or a start of a major multi-year uptrend, Muthoot Finance would probably stand to give you better returns as well as more stable returns over that kind of a time span. So I think you should look to hold on. If possible, and assuming if the stock corrects towards that 1,000 mark again, I think that should be a good opportunity where you can look to average further and bring your cost price to maybe somewhere around 1150, 1180 mark with a like-to-like position size basis.
Okay. Avinash, this next query we have is coming in on Sona Comstar, and this one is from Manas. He is holding this already at 548 rupees per share, wants to accumulate more, and his time period is 3 to 4 years, so long-term view. What would you be saying? Is it a good idea to actually buy more at current levels?
Yeah, I think Sonacom definitely looks a pretty strong candidate. In fact, it has a large electric vehicle portfolio and supplies to almost the top 25 electric vehicle manufacturers globally. The stock has corrected, from a high of almost 675, 700 rupees. But I think if the investor has a 2-year call, then I think definitely this is a good automotive component business which he can invest. But take a time frame of at least 2 years plus. Because we believe that, as electric vehicle penetration becomes stronger in the country, it has a good chance to show a strong kind of top line as well as bottom line growth. So continue to hold on, and if at all even current levels one can average, but keep a time frame of 2 years plus.
Kunal, this one's for you. TP Vinod is writing to us from Salem, Tamil Nadu. He's, of course, a very regular viewer. Today is his father's birthday, whose name is T.R. Prabhakar, who also watches Buy Now, Sell Now very regularly. So this question's for him, Kunal. His TP Vinod's father is holding 600 shares of Caplin Point at 250 level. Wants to know how the long-term outlook looks.
So first of all, wishing your father very, very happy birthday. My belief is that Caplin Point is a very quality kind of a stock. Now, there are phases where quality stocks, they do exceptionally well, and then there are phases like, many of these quality stocks, they go into a time-wise correction. We are into a latter phase for, Caplin Point, where the stock is going through a time-wise correction. I would still believe that, you should look to hold on to the stock, even at current levels of 750, 55 approximately. My belief is that whenever this consolidation ends, you could probably expect the stock to break that 4-digit mark as well. So 1000 plus is where I would place a more of a longish term target for Caplin Point, and beyond that as well. So I would suggest to hold on.
Okay, that's the view on Caplin Point. Hold on as of now. But also a happy birthday from the ET Now team to your father as well, Mr. Vinod. But let me move on and take the next query. Avinash, the next query we have is coming in on Bank of Baroda. This one is from Vivek, and they want to know for a long-term view, almost 1 to 2 years view, is it a good time to buy this one?
Bank of Baroda, if one has a 12 to 18 month view, I believe the bank has already posted very strong Q2 numbers. The management commentary has also been very strong, and with a credit growth of more than 15%, I believe longer term prospects now for most of the banking stocks, including Bank of Baroda, look promising. So I think he could look at a target price of around 220, 230 if he can hold on for the next 12 to 15 months.
Right, Kunal, this one's for you. Amit is writing to us from Houston. He wants to know about DCX system. He has 300 shares at 5,000. He's asking whether he should keep it for long.
Well, won't be able to comment because I think it's a recently listed name.
Okay. Kunal, actually, I'm going to come to you in terms of that. Swayam Chopra has a query coming in on Apollo Tyres November expiry. Wants to know whether they should be looking at this one. What are you expecting here?
So I would suggest to stay away because, the reason for suggesting that is the last 3 months, I think August somewhere, the stock had formed a top which was around the 300 mark. Last month or last couple of weeks back, the stock had formed a top again or a retest of the 300 level. Even yesterday, the stock on the back of some dramatic comeback for most of the tire names had a top closer to the 300 mark, but then it's failed to give a big breakout about those 300 levels. And today, in fact, the stock has corrected back down, some 2.5%. So I would be of the belief that you could look to stay away from the stock, at least as of now, because this 300 mark is acting as a huge hurdle point for Apollo Tyres. So till the time your risk reward is not lucrative or more than 1:2 to 1:3, I think you should look to stay away.
Right. Akhil is writing to us from Delhi. He wants you to suggest, Kunal, when is the right time to buy BEL or HAL, can hold for 2 to 3 years. Also, he wants your view on Zomato. So 3 questions, BEL, HAL and Zomato.
So BEL, HAL, I think you can look to buy even at current levels. It's very difficult to try and get a very precise kind of a price for these kind of stocks because these stocks hardly go into a major correction. So whatever correction, smaller correction you get, you can look to keep on adding the stock. Both these stocks are more formidable names from the entire defense pack. Now for Zomato, it's a bit tricky because now the stock has run up exceedingly high. It's come back into the cynosure of eyes for many investors about the 70-odd mark. So you have to wait out for a period where these stocks consolidate. I would suggest that maybe 63, 65 could be a good zone to buy Zomato for more of a medium to longer term target of 88 to 90.
Avinash, this next one is coming in for you. We have a query from Mayank, and he's holding 2,000 shares of Federal Mogul at around 300 rupees per share. What's your view for this one for the next 2 to 3 years?
I think Federal Mogul is an MNC auto component business which is into gaskets and engine components. In fact, recently the company had made an open offer to take over the shares from the public, but the entire public shareholding was not it was not possible to conclude the offer. Overall, operationally, the company continues to do well. If the investor has a 1 to 2 year view only, then one should look at investing or maybe holding on to this company because unlike other auto component companies, this company does not have a very strong track record, but the parentage is very good and the product potential is pretty solid. So continue to hold on, but obviously keep a time frame of at least 18 to 24 months.
Kunal Shiva from Hyderabad asking if you can buy Reddington for short term of target of 180.
Yeah, 175 is the target which I think I've given for Reddington yesterday or day before, if I'm not wrong. So I would suggest that if you have that kind of a time frame, it makes sense to buy the stock.
Okay, Vinash, this next query we have is coming in from Jay Krishnan, and this one is on Tube Investments. How is it looking like for a mid to long term if someone is looking to invest in this one? Is it the right time to buy now?
See, I think Tube Investments definitely should benefit significantly from the upturn in the automotive and the engineering business. Although the stock has run up quite significantly, if the investor has a 12 to 18 month time frame, I believe Tube Investment looks very well positioned to capture the upside in both the engineering as well as the automobile business. So I think definitely on any market decline, one can look at accumulating this counter, but with a time frame of 12 to 18 months.
Avinash, coming to you now. Arpan writing to us from Kolkata. He has a sizable number of Medanta. He's also saying that it's made a stellar debut. Now he's asking, considering the pharma sector, should he book partial profits?
See, I think my guess is that hospital stocks are in demand and are in favor now, and Medanta is a very well-known hospital chain. In fact, they've just commissioned 2 hospitals recently, and both of them have broken even. So I believe that if the investor can hold on for the next 6 to 8 months, once quarterly numbers, management commentary comes out, we could see a further re-rating in the stock. So as of now, I would suggest him to hold on.
Okay. Kunal, this next one we have is coming in from, this one is on AIA Engineering. This one is from Shri, and they have bought it at 2,600 rupees per share. Wants to know your short-term view on this one.
So I think AIA Engineering is a classical stock and has done exceptionally well on a longer term basis. I'm not sure of the liquidity front, for the stock, because my belief is that it's a bit of an illiquid kind of a stock. The average trading volume is just around some 30-50,000 for AIA Engineering. That's the only catch with these kind of names. But again, it's a stock which has done exceptionally well, has a more than a decade-old history for itself, doing pretty well in all periods of market. So you need to have such kind of a stock as well, which are more considered to be strong, trending stocks on a longer term basis. So would be bullish on the stock. But as I said, the only catch towards these kind of names is the liquidity.
Right. Avinash, coming to you. Pratiksha is writing to us from Muscat. She's asking, when is the right time to buy Divi's Labs?
Yeah, I think Divi's Labs, one would have to wait for at least 1 or 2 more quarters, because obviously, the headwinds for their business has got considerably weakened. My sense is that, the Q2 numbers were pretty disappointing. The management commentary was also very cautious. So I think if the investor wants to buy in, you could probably wait for the December quarter. After that, possibly, I would believe that things could start improving gradually. So now is not a time to accumulate or look at the counter. I mean, wait for the third quarter numbers to come out. At that point of time, one could look at it from a long-term perspective.
Okay, the next query we have is coming in from Nino. Nino, very good morning to you as well. And this one is for you, Kunal. Surya Roshni. Nino wants your technical view on this. Currently, they have 100 shares at 490 rupees per share. That bought it around 8 months back. What should be the ideal price to actually exit this stock?
I mean, I don't know what's the reason why you are looking to exit the stock, just because you are in 15-20% profits, but I would believe you should hold on to this investment, because my belief is that the stock has just started to get into a multi-month up move. Now, assuming if the markets also remain stable enough from here on, my belief is that the stock should do pretty well for itself, even cross about the 550 levels first, and then possibly go closer to the previous major highs in 2021. That's around the 750-800 mark as well. So I'm not sure of the exact reason why you're looking to book out profits so early. I believe you should look to ride this trend for Surya Roshni.
Kunal, Pankaj is writing to us from Jabalpur. He's asking about HG Infra, buying price 644, quantity 50.
I think you could look to maybe sell the stock on rallies. 578 is where the stock is trading. 625, 630 is a huge resistance point for HG Infra. So the closer you are towards the 625 mark, the better it is that you look to exit on rallies.
Okay. Avinash, Dheeraj wants to know whether they can start adding Indian hotels for a long term at the current level and looking at now.
Yeah, I think if the investor has a 2-year time frame, then I think one could definitely look at accumulating Indian hotels. We believe that post-COVID, the supply for fresh rooms in the hotel sector has got constrained significantly, and due to its pan-India status plus the kind of hotels Indian hotels run, they are uniquely positioned to take advantage of the upsurge in the hotel sector. So I think on declines, definitely worthwhile adding, but keep a time frame of at least 18 to 24 months.
Right. Kunal, this one's for you. Vivek is writing to us and he's asking about ITC. He wants to add to his current price of 270. He's asking you for the best price to enter for the next 1 year.
So it's just recently that ITC has started to correct from 360. I think the stock has come back towards 345. Ideally, in these kind of scenarios, the stock actually comes back closer to the previous support. The previous support for ITC is just around the 320 mark for the stock price, and that assumption is based on the fact that the stock actually goes into a multi-week correction rather than just about a minor blip in the larger scheme of things. So if you can wait, then I think 320 could be a better level to average or add ITC.
Okay, with that we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more.
Live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going with your queries then. Avinash, this next query we have is coming in from AKM, that's Ayush, and this one is from Bangalore. He's asking for your long-term advice on Thyrocare Tech as well as Supriya Life Science. What's your view on both these stocks?
See, I think in both these companies, the long-term view is quite patchy, considering the fact that Thyrocare is now part of the Pharma AG kind of group. Our sense is that in the diagnostic space, there's going to be a lot of competitive pressure, considering that a lot of supply has come in. So I would not suggest to buy fresh at the current odd levels, considering the fact that you could see a little bit of margin pressure coming in the coming 1 or 2 quarters. Supriya Life Sciences also has put out a little muted kind of number in Q2. They are large players in the API space. So if at all, if somebody has a 12 to 18 month view, definitely one can look at this company from a long term perspective. But in the near term, one could definitely expect a very short kind of trading range. So both these companies are good for long term, but definitely Supriya qualifies as a good long term bet, and Thyrocare should be avoided at the current level.
Kunal, Yogragini is writing to us from Saudi Arabia, holding 300 shares of GHCL, bought at 692. What should she do now? Average or exit? Or how many should she hold for a reasonable profit?
No, I think you should look to hold on to the stock. I think, at 700-ish odd level, GHCL was looking extremely attractive. The stock was on the verge of a bigger breakout. It's come back to its 200-day moving average, and we've seen historically that 200 DMA for GHCL has acted as a major support point. At least from the 2020, we've seen that kind of a change for the stock price. Even like yesterday or day before, the stock had crossed below the 200 DMA, and today you've seen a bounce back above this level. So which means that this is the first level where there is a good amount of fight coming back from the bulls for the stock. I would suggest a hold.
Okay. Avinash, actually this next query we have is coming in for you. Indumati wants your long-term fundamental view. If you could actually say any 2 fundamental small cap stocks or machinery stocks for a long term.
I think if the investor wants to take a call on some capital goods companies, then I think 2 companies are very interesting. One company is Action Construction Equipment, which is a company largely in the crane as well as in the material equipment space. We believe that if the investor can hold on for the next 12 to 15 months, a good upside of even 18 to 20% is possible. And the second company is Sangvi Movers, again a Pune-based company which is into the crane rental business. Again, a small mid-cap company, but which has got a large order book and which is going to benefit from the upsurge in the capital goods sector. So both these companies, at the current levels offer a decent risk reward. So the investor can definitely look at investing in both these companies for the next, say, 12 to 18 months.
Right. Kunal, Kiran is writing to us 140 number of DMart at 4,180. Should he hold or exit from current levels? He can also hold for the next 3 to 4 months is what he's saying.
See, I believe you should be a bit cautious over here because the stock has gone into more of a I would not say a free fall, but a very swift kind of a slow steady sell-off for itself. So I think at current levels of 4,015, 16, it's also crossed below its 200-day moving average. So some sort of concerns have started to emerge for DMart on the charts. Purely on that regards, I would suggest that you should be a bit more cautious. I would probably keep or suggest a stop loss of maybe 39, 40, 50 for DMart. If the stock breaks this level on the back of some higher volumes, then that could be a time where you can look to exit.
The next query we have is coming in on DV's Lab, and Avinash, this one is for you. Rajesh has bought DV's Lab 30 shares at around 3,725 rupees per share. Now, obviously, currently the stock is down from their buy price, but can they continue to hold this for a 3-year time period, or what should they be doing now?
Yeah, I think the headwinds currently, as I mentioned earlier, for the next 1 or 2 quarters for DVs are going to be pretty challenging. Margin pressures would continue, but if the investor has a 2-year plus view, then I think he should continue to hold on. We believe that within the CRAM space, the company is a market leader. We believe that once the expansion benefits start coming in, margin pressures would ease out. So I think keep a time frame of at least 12 to 18 months. Until that time, continue to hold on.
Right. View coming in on Hindalco. Jaspal is writing to us from Mumbai. Kunal, you want to take that?
Yeah, I think I've voiced my opinions bullishly on Hindalco, sometime back as well when the stock was at 405, 410 range. I think it's a good time where you can look to maybe hold on to the stock at current levels. I'm not sure what's your actual tilt towards the stock, but if you're already holding the stock, then I think you should continue to hold on.
Avinash, this next query we have is on ABFRL, Aditya Birla Fashions, and this one is from Rajesh Maheshwari. They have 550 shares of ABFRL at 250 rupees per share. Could you advise if they should continue to hold this for a medium term or exit the stock?
No, I think Aditya Birla Fashion stock is definitely a promising opportunity in the retail space. In fact, the Q2 numbers have been very solid, and I would not be surprised that for FY23, the company, reports a solid profit on the net level. Our sense is that, in the branding space and the retail space, they have been acquiring a lot of promising brands. So this is all going to play out in the next couple of years. And retail is a large business where ABFRL is definitely going to, grab a higher market share. So continue to hold on. The bigger story could possibly emerge in the next 2 years. So a very promising stock in the retail space.
Right. Raghuvendra is writing to us from Bangalore. Avinash, this one's for you. Raghuvendra is writing to us from Bangalore. Long-term investment, needs a view on Vaibhav Global. He's looking for a fresh and new investment.
See, I think Vaibhav Global, according to me, is going to face multiple headwinds at least for the next 2 to 3 quarters, considering that their larger markets are in Europe and US. Europe is facing, contraction in the economy. They have a huge energy crisis coming up. So, the products which Vaibhav, Global, sells are basically discretionary items where demand has come down significantly. So I would believe that, there's no need to hurry as of now to buy the counter. I think wait for the December quarter, the management commentary, and at that point of time, if things improve and there are some positive tailwinds, then I think one could look at buying the stock.
Query is coming in for you, and this one is on Reliance and Tarsen Products. Now, Richa wants to know whether they should actually look to enter this one at current levels, these two stocks.
Reliance and Tarsen Products, you said, right?
Yeah.
Reliance, you can look to add at current levels. My belief is that the stock is getting into a momentum zone for itself about the 2,500 mark. We've seen recently the stock breaking out and performing quite well. Tarsen, I'm not sure because I don't track the stock, but for Reliance, I would suggest that you can look to buy or add.
Right. Avinash, this one's for you. Sandeep is writing to us from Tirupur, Tamil Nadu. He's asking about metal sectors, which stocks to invest in for the next 2 to 3 years, and also power sector. So metal and power sector, stocks to invest in for the next 2 to 3 years.
I think from the metal sector, we continue to be positive on Tata Steel. I think that is one stock where we believe that, since it's an integrated player and has a good global as well as domestic positioning, Tata Steel, even at current levels, if one were to take a position, obviously in the near term, the headwinds are challenging. But in the next, say, 2 years, hopefully Tata Steel should do well. And as far as the power space is concerned, I think one could look at PSU giants like NTPC. I believe NTPC has been a stock which is going to deliver excellently considering the expansion of its capacity and the kind of tariff rates which it has got on the power generating business. So NTPC as well as basically in the power generating space would be a good choice.
I believe Tata Power has not been one of the best performing stocks.
Okay, let's go across to Nayantara, who's joining with us as we have the management of Medanta joining with us. On that note, let's go there.
Well, we have not one listings today, but two. We got to the management of BKG early, and as you can see on your screens, miking up for you, live television, all the action behind the scenes. Dr. Naresh Trehan, India's leading cardiac surgeon, joining us, as well as the CEO, Pankaj Sahni. Thank you so much for giving time to ET Now on your big day. This is Nayantara. We saw a listing pop of 20%. Dr. Trehan, how does it feel?
Hi, Nayantara. Of course, it's a good feeling that the value of Medanta as a delivery system to deliver the high-end care that we do deliver across all specialties on the same platform is one has been recognized by our patients in abundance, which is very nice. But on the back of that, the investors have also actually understood the real value of Medanta and how it's going forward. So we are appreciative that there is a good response.
Absolutely, and as part of Pankaj's speech at the NSE, 5 hospitals in 5 states, he's talked about the healthcare superheroes that helped us all during COVID-19. But Pankaj, be honest here, when you folks set the price band, 336 rupees being at the upper band, did you think you would get a 20% pop? Did you think it would be less, more? What was the anticipation?
We through this entire process have been very privileged to come across a range of investors, both international as well as domestic, across every kind of category of investors, speaking to them over the course of the last several weeks and months. We've been privileged to engage with them, learn from them not only about their experience and their understanding of the healthcare industry and their views on our organization, Medanta Global Health, but also very interestingly pick up various anecdotes. Many of them mentioned to us that somebody in the family had been touched by Medanta, somebody had been treated by one of our doctors or in one of our hospitals, and they expressed immense gratitude to our doctors, to our fraternity. And this gave us additional confidence as we moved forward in this process. As Dr. Trehan mentioned, our patients have supported us over the years. We've been fortunate and blessed that we've been able to look after them over these years. And now we feel very fortunate and very blessed that we've been able to add a new set of stakeholders to the Medanta family, our shareholders. And we hope that we will be able to support them. We will be able to bring them into our family, and we will be able to justify the trust that they have placed in us as we move forward. Whatever the value of the listing may be, we see this as day one in our journey again as we move forward. As many people have told us that the story in many ways really starts now. We like to think of it as a new chapter in our ongoing story, and we're very proud to be able to have reached this far, and very proud that our shareholders have given us the trust to take them forward into the years ahead.
Dr. Trehan, Pankaj is saying it's day one still. I think Steve Jobs and all made that phrase very, very famous, didn't they, when it comes to world of business. But Dr. Trehan, let's talk a little bit more about business. 5 hospitals in 5 states. There are those that are under construction. Can you tell our viewers, and some of them will now be your retail investors also going forward, what the larger expansion plan is?
So, Nayantara, if you look at our DNA in which we have actually progressed, first of all, Gurugram, Medanta Gurugram was actually made to bring to India the highest care that is available by specialists across all specialties on the same platform, much like what is represented by institutions in America like Mayo, Cleveland Clinic, Harvard Medical. So that was the model that we wanted to create, because in this part of the world that was missing. And we found that as soon as we created that and opened at the end of 2009-2010, beginning of 2010, that the people actually appreciated the fact that their outcomes were so much better because all the specialties were available on the same platform at the highest level. So much so then, of course, we got the confidence that our systems were robust. We took it to other places like UP needed it in Lucknow, 1,000 beds, 200 million people. We went to Patna with 130 million people, again 650 beds. Then Ranchi and Indore likewise, and then we have started this 550 bed hospital construction in Noida. So our whole methodology is that we stick to the core values of the highest end of care across all specialties and try to make it as affordable as possible for the patients so that maximum number of patients can benefit from our facilities. So keeping these 3 principles in mind with total integrity, we will keep moving forward. as and wherever people need us, we will go. Story, as you see, from 2010 to 2022, it has already multiplied into 6 locations. Then we will now continue to look at other opportunities where we have the ability to serve those people. The whole principle, like I say, the story will. And again, I would say that patients already had given reposed their confidence in us, and now that the investors have reposed their confidence, it gives us even more responsibility to do it right, and actually not only investment. So
right. So since Dr. Trehan is talking about future opportunities, I'll come to you next, Pankaj. I've read about your background, for example, at McKinsey. You're now the CEO at Global Health as well. What we've seen in the last couple of weeks and months, actually, is a consolidation in the hospital sector. Whether you look at a Max Healthcare and what happened with the KKR. There are reports coming out as far as care hospitals go. There are reports that are coming out about Manipal Healthcare. So as Medanta grows and goes to more states, is it going to be organic or is it also going to be inorganic? Because clearly there is consolidation underway.
Our focus, Nayantara, at Medanta has always been to make sure that whatever we do, we stick to